traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. Our guest today, coming up here in another 10 or 15 minutes, or 10 minutes, will be Michael Moore of Moore Analytics. He's given us some great information about the energy markets and other markets, so he will be our guest coming up here in about 10 minutes. Now, I've posted a chart here of the NASDAQ as we were yesterday. You can see the big move down. There's a beautiful ABCD to the downside in the NASDAQ, and if you pay any attention to Fibonacci numbers, the Fed came in just a little while ago and said, we are going to go up, and by golly, the NASDAQ went all the way up to the 61% level, as you can see on that chart. I didn't update it because it just actually didn't have enough time, because it's only been just a few minutes since this occurred, and I just wanted to give you a heads up that that's what's going on. Now, the other one that I wanted to show you, and this is one that I actually did, because I think I didn't realize the Fed was in there talking today, which that's my bad, because I don't follow the fundamentals at all. But you'll notice here, this is the 382 here in the E-mini S&P. That number actually was, you had to take the high, not this high, but the previous high. That came in at 40.44, and we had a buy stop at 40.54. They were filled about the same time. It was so fast. It was click, click, and you just quickly lost, your points right then, and then you just moved on. The interesting one also today is the fact that we had a pretty good move here off the euro. We covered the euro position yesterday down there at that 106.90. It's rallied up to 107.70 and change, almost exactly to the 382 retracement. So that's a main thing to take a look at. I want to have a little talk here, folks, about, people have different opinions here on the show, and, you're entitled to your opinion. You really are. And one of the most frustrating things in the world is if you try to please everybody, and you just can't please everybody. It's just absolutely impossible. So if you believe in Bitcoin, or you believe in Warren Buffett or any of those people, that's okay too. But someone might have a contrary opinion to that. And that's what makes these markets, folks. Nothing more, nothing less. That's really what we're paying attention to. Now, let's get back to the markets. Okay, now here's one that we've been following for quite some time, and this is the first time in the last 3 or 4 days that we've actually had a slightly bullish, and I'm talking slightly here because, it's way still, these are contract lows that you're looking at right here, but this is the perfect 135 pattern right here, folks. This was the low. Early this morning, and you can see the distance. This is just the time frame on this 15-minute chart, saying there's a cycle coming in right about here. There was your low at 242 and change, and it went all the way up to 257. It completed this larger ABCD pattern. There was the first one right here. You can see there's your A, B, C, D leg. That's completed right up here, and then it made another A, B, C day all the way up at 258. So it's a short-term chart. It's 15 minutes, but it does one thing that helps you more than anything else, and that is it gives you a place for risk control. There's a great book out there, folks. If you want to spend $10 for yourself, here's a book that you should get. And it is called Fooled by Randomness by Nicholas Taleb, the guy from the Black Swan. That book will give you more information about risk control than any book you're ever going to read. I mean, John Jameson, who's one of my dearest friends, he thinks that's his number 2 or 3 book that he's ever written, or that he's ever read. So I don't even know what 1 and 2 are. One's probably the Bible because he's very, very religious. But it's just a great book, and it's only, I think it's $8 on Amazon. You can get it there, but it tells you about risk control, not about the markets, but about risk control and stuff which are related to the markets, because that's really what we're doing here is when we're watching these things is to stick with that kind of stuff. And whether it's right or not, whether it's wrong or not, who knows? It's just one of those things. If you remember yesterday, we were talking about this. Let's just get this up here. The importance of the buy that was down here in the S&P yesterday, the fact that it did not go below that low that we were talking about, which was right here. It did not do that, folks. It never broke that low at 40.05, I believe. And now we got all the way up to the 78% level at 40.76. So these markets are rocking and rolling, folks. So it's nothing. This is just a perfect pattern. That's all it is. Here's that same pattern just like natural gas. It's a 1, 3, 5 pattern right there. So that's all it is. I got another email last night about Elliott wave that I'm not giving it enough chance. Folks, simplicity beats complexity. Simplicity is in AB equals CD. Complexity is when you add little tiny nits and crannies to it, like a 1, 2, 3s, 4s, and 5s. I believe the market runs in patterns of 3, not in patterns of 5. Mr. Prechter, he's got an IQ about 3 times what mine is, and that's when I took the test twice. He is a really smart guy. I keep it as simple as possible. You know why? Because it works for me. It's real simple. It works for me. If it's there and it gives me a chance, I know I got a little bit of a chance to possibly make a couple of bucks in here. But that's all it is. It's just numbers, nothing more, nothing less. There's nothing more exciting than that. It really isn't. Now, here is the reasoning. I wanted to get this up here and show you why we were covering the euro. Oh dear, what did I do with that chart? Shut the front door and raise the rent. Here it is right here. Let's get the chart up here and why we were covering the euro. Let's get it up here. Someone asked that question, so I wanted to get okay, here's where it is. You can see here, we sold this up here right on the air when we were here, folks. This is when we were on the air right here, just 4 days ago. We were trading up there at that 110 and change, 110.20. The high was 110.30. That was a 1.618 expansion of this move right here. It is a perfect A, B, C, D in both price and time. Another AB is equal to CD in both price and time, and that gets you to this level right down here, which is where the 61% retracement came in here, just below 107, and then we've rallied 80 pips since that time, and we missed the 382 on that rally, at least the last time I checked, by about 15 pips, so might not have been able to get back in, but we were trying to sell the 382. After covering the short here, we did not go long. Probably should have, because you're in an uptrend. Higher bottoms, I mean, why didn't I think of buying it there? Had I known the Fed would have been in there, I certainly wouldn't have done it. I would not have done it because I don't like to be in front of the Fed. Let the Fed do their thing, and then I'll take a look at it. So that's what we're looking at. Hey, listen, we are going to have Mr. Michael Moore from More Analytics coming up here in just a few seconds, or a couple of minutes after the break and stuff. And folks, he's new to our program here. I think it's the third time we've had him on. The other 2 times he was just giving us some really good information. And I think it's important that we listen to what he has to say. We're going to take a break. When we come back, we're going to have Michael Moore of More Analytics on the line. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, and we have Mike Moore on the line from Tennessee. Mike, how are you doing today?
Good. How are you doing today? Thank you for having me on. I appreciate it.
It's my pleasure, my friend. Why don't you go ahead and take control? You've given us some great information. This is the third time we had you on. You're 2 for 2, so it's like the restaurant business. As long as you're making the folks a couple of bucks, they're going to be happy. But they like it either way because they're accustomed to seeing losing trades for sure. So why don't you go ahead and tell us what we're looking at, my friend?
Okay, so I think last time we started off with natural gas, so we can start there if you like. As you recall, we've been talking about this for a couple weeks. Been bearish since 844, but more importantly, the break below 499.30 projects us downward, 227 minimum, 470 plus maximum. So we hit that, and when that we're supposed to see, we could see the rest of that within another 1.5 months' time. Mm-hmm. We've already seen the minimum of with 265, taking out the 227, and then more recently. The trade below this formation down here, I said would probably push us down to the 150s, and then we broke below another formation here, which we're under pressure, and we pull right back up to it today. That formation comes in here at 258.30 to 259.20, and the high today is 258.60, so just touched on it. Dropping down a time frame. On the daily charts, where it looks like we're leaving a gap open higher today. So if that remains in place, that would be bullish short term. And then on the lower time frame chart, on the 60-minute chart, give me a second here, moving this around. We'd broken above this formation yesterday, which I said would warn of strength, although I did not suggest leaning on it because it wasn't a great formation. And then we took out this formation, which also warns of strength. So short term, I'm bullish. But we really need to take this line out decently on the upside at 258.30 to 259.20 to open up the upside.
That was almost the high of the day, was that 259. Yeah. We have a question for one of our listeners, Mike. Is there a possibility natural gas could go negative like crude oil did? Because you were alerting for folks that could possibly happen before it happened. Is there a possibility that natural gas could go negative?
Sure. I don't see why not,
Wow.
It costs the store. So, I mean, even guys that have been in the business for 30 some odd years didn't think the crude could go negative a barrel, but it did. So anything's possible. I know a lot of people have different sayings for the commodity markets, but one saying that definitely is true is that the market can stay irrational far longer than liquid. So, but now we have some interesting things going on in the crude and the products. As a reminder to all of you out there, if you're looking for a great leading indicator for crude, just remember that the unleaded gasoline and the heating oil lead the direction of crude 85 to 90% of the time. So that is a great leading indicator. Now the crude oil here, we've been bearish since holding exhaustion levels up here. We broke below this formation, came back, touched it once, twice, 3 times, and then just really capitulated. And then we broke below a more macro formation here the other day that I warned would bring in pressure for, let me see here a second. Trade below 77.14 projects us downward 280 minimum, $7.30 plus maximum. We attained 489 of that so far. But then yesterday I said that this went out poised for short covering. So we saw the short covering, and then today we took out a bullish formation at 75.47 minus 2 ticks per hour. That projects us upward another $4.10 plus. And the key is really to take out this upper line. If we can take this out decently on the upside, and decent penetration today, I believe, is 120 ticks or $1.20, then that'll open up the upside more. Importantly is to really understand what's going on in the unleaded gasoline, because it is right on the hair's edge of breaking back above a formation. So this is the one that we talked about last time. We'd failed back down below this line and really just came off pretty hard over here for the next day or so. And as a reminder too, this is the importance of understanding what the cracks are doing. What cracks are spreads between the product and the underlying crude. The RBOB crack, or you could call it the unleaded gasoline crack, was bearish, meaning that the unleaded gasoline should come off harder than the crude when the market sold off. So you can see right here from this sell-off was to the tune of about $7,000, whereas your crude oil was only, similar move was only $4,000. So, and that's just in under 48 hours. So major difference there. And right now the cracks, and some people might say, well, why do you analyze the cracks? They're a thinly traded market. There's not a lot of liquidity in them. I analyze them because what they tell you about what the outrights are going to do is very important. So for instance, the heating oil crack right now is right about to break above this bullish formation. If it does, that's going to project this up probably $5,000 a contract, which means that if the market rallies, you would rather be long the heat than the crude. And you could see, literally could see $5,000 more per contract in just a number of days. And the unleaded gasoline crack already broke back above a couple bullish formations, so it's bullish right in here. So that basically says, A, the heating oil crack is bullish, which means the heat should be strong relative to the crude, or the crude weak relative to heat. We know that the RBOB crack is bullish, so that means that the RBOB is strong relative to the crude, or the crude weak relative to the RBOB. And then the question is, how do you figure out whether the RBOB is strong or the heating oil is strong? So you look at the RBOB to heat spread. And that I've been bullish for a number of days up into here. And again, this just shows you the financial difference in a couple of days of 11 grand in 4 or 5 days, except for in here I said we held the exhaustion that we might reject out of, which we are. And then I said if we broke below this bearish formation here, that would turn it bearish. So we've broken below there. So that means that now that the unleaded gasoline is weak relative to the heat, or the heat strong relative to the RBOB. So that sets up your hierarchy for the day. that means if this rallies, the heating oil is probably going to lead the charge, and you're going to make far more money being along the heating oil than you will the unleaded gasoline or the crude oil. You could be making money on any of them, but the likelihood is that you're going to make a lot more on the heating oil than you will the crude.
Wow, that's good. We're going to have a commercial coming up here in about 30 seconds, Mike. Can you tell the folks, you got a whole segment coming, but how do the folks reach you? What's the best way to connect with Mike Moore?
Right here, you can go to More Analytics. So it's MOORANALYTICS.com, or you can reach me on email or phone.
All right, listen, we'll be right back with Mike Moore of More Analytics with some more information on the energy markets and other markets. We'll be right back, folks.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Mike Moore of More Analytics. You want to continue, Mike?
Sure. Can you still see my screen?
Yep, we're in good shape.
Okay, so the key is here, if the unleaded gasoline takes out this formation decently on the upside, which means it would really have to trade at 246.90, then that's going to be bullish. And then if on top of that it takes out this bullish formation, it could really open up the upside. So one of two things is going to happen right here. This is either going to dump hard or it's going to hit that stop above and this thing's going to start to rally again. So I'd be watching that in the unleaded gasoline, and the heating oil looks like it may leave a gap open higher today, or a minor gap that's just about right. 279.70. Yeah, that's it. Close enough. And then the crude oil, like I said, if it gets back above this formation, that's then going to open up the upside to higher trade. And what do I mean by opening up the upside to higher trade? I mean, probably going to trade up to the 80, 81 and higher levels. And then we have some more macro bullish formations up here. So this is critical. Either this is really going to push to the upside and take these areas out, or if this rolls back over and takes out this line right here, then this thing's going to dump, should come right back down, take out 72.25 and keep on heading lower. Because remember, we still have this projection to the downside of 280 minimum, 730 plus maximum. We've only seen 489 of that so far. That's going to be on hold now because we broke above this bullish formation. But as soon as this breaks back down below that, that is off hold, and then we're looking for another piece of that to the downside. Did you want to take a look at the S&Ps?
I have a question, Mike. One of our listeners is asking a question, one of the folks here in the den, and that is, you have, since you're in the energy business, you probably have a lot of contacts on the commercial side. Is that correct?
Some, yes.
Okay, now the question that he has, do you use any of that information that they give you as far as making a prediction, or are you strictly a technician when you get that information? Because, you know, when you have a bias, that's my fault. One of my many faults is I have a bias sometimes in the market. Does that affect you at all, Mike, when you look at something, or someone tells you that, gee, there's a, you know, big glut of oil or whatever it happens to be, or something like that?
No, not at all.
Good.
I'm not
okay,
really
that's great.
on that.
Yeah, well, you're here in this business long enough, you forget it. That's for sure.
Well, they usually are getting the analytics. I mean, news-based events is a different story, obviously. But the fundamental news, as it paints a picture, is usually following what the technicals are telling you.
Okay.
So, did you want to take a look at the? Just as I got a compliment from somebody at Conoco, he said that it was the head of the analytics department there, and I'd asked him what he thought my track record seemed like compared to the fundamental track records. And he said, your technical track record far surpasses any fundamental track record I've ever seen. So I thought that was a nice compliment coming from somebody.
It sure is. Yeah, it sure is. Yes.
But that's not, and I'm not saying that to whatever, boast or whatever. I'm just trying to lift up the veracity of why I look at technicals.
Yeah.
And frankly, I think some of the guys that are entangled with all the fundamentals are probably more intellectually intelligent than I am. It's just, I don't think it's not. On a day-to-day basis, on a shorter-term basis, it's not as useful for trading.
Yeah. All right. Please continue, my friend.
Yep. All right. So let's just take a look at the S&Ps real quick. Now, the S&Ps, if you may recall, from the highs, we were looking for a macro exhaustion level. Let me come out of this chart here for a second. I was looking for macro exhaustion down in this level at 35.31 to 35.04. We held that with the 35.02 low. And then we had a minimum target of 37.93. So we held that here. We hit the minimum target of 37.93. And as you recall, we came just shy of that higher time frame target over here, which was at 41.90. We came shy of it with the 41.80 high, rolled over, and then we just hit the 41.90 just a couple days ago and rolled over a little bit here. So the question is, what is the big picture here for the S&Ps? Well, there's three kind of scenarios here. We've just completed this structure, and this has just fulfilled the minimum of a bullish correction against this structure. So we could either go up and hit higher levels of correction and then resume another whole new bear structure to the downside, or this could start a whole new bull structure to the upside. I'm partial to the second argument because this looks more corrective in nature than trending. What do I mean by that? That means that as it's coming down, it has attributes about it that suggest that this is eventually going to continue higher, not continue lower. But you got to play that on a day-by-day basis. And then just on a very short-term basis, we'd held exhaustion right up here at we held exhaustion at, excuse me. We held exhaustion at 42.07.50 to 15 with a 42.08 high and rolled over 104.5. Now, if we break below this formation, that decently, that should warrant a pressure, but I don't think we quite got the decent penetration here. Decent today was 30. Let me see here. And that was T28. 30 would be 36. Hang on a second here. Just checking my numbers. Bear with me, everybody. No, that wasn't a decent penetration. So it just held this lower line, but if we do get a decent penetration above this higher level, that should bring in pressure. And we did hold the lower line right here this morning and pop. So a decent break below that is going to bring even further pressure. That line is going to come in at 41.12.5 and then move up a little bit each hour. So I think there's a good likelihood we may come off a bit before resuming higher trade. We'll have to see. We take out these highs up here. Obviously, we can then move up to test higher exhaustion levels above two main areas of exhaustion up in here in the 42.85 to 43.06 level and 44.66.75 to 45.30 areas.
Mm-hmm.
You want to take a look at the gold?
Yes, sir. If this was the next question someone had was about the gold. You were online here about 2 weeks ago saying there should be strong resistance up there near the high, and I think $100 down in 2 days definitely qualifies for strong resistance. So what are you looking at now, Mike?
Yeah, so I think that this is just a macro pullback, really, before resuming higher trade. Okay. And I want to just give you an interesting this is a major formation here that we'd broken back below, pulled back up to it, held it here again, and then we broke back above this back in January, ran up, and we've just pulled back down to it. So either this is an ideal place to get long again to look for another rally out of here, or we may break below that and come off further. Bear with me here. But on lower time frame charts, one of the reasons I was bearish in there is because we'd failed back down through this formation right here in the morning. And that really is what started to bring this capitulation. We broke below another formation here, and then a more important formation on this chart right in here. And that's really pulled into pressure. Now we've also held this main exhaustion.
Mike, we got to pay a few bills here, so stay with us. Yeah. We got another segment coming with Mike Moore with More Analytics. Great stuff, Mike. Keep it up. We'll be right back with Michael Moore, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. We're speaking with Mike Moore of Morgan Analytics. You continue, please. We really love this stuff. A lot of good kudos for you today, my friend.
Thank you very much. So, yeah, we're saying we broke below a couple different formations in here on the June contract, and on the continuation contract, we've been holding this main exhaustion level right here at 1877.30. If we take that out in these general areas in here, 1871.30, 1872.40, then we'll probably come off and test some of these lower exhaustion levels down in here in 1847.10, 1838.90 area. But if we hold this in that main line that I was talking about earlier on the weekly charts, this thing could rally back out of here. We're trying to test right now and test this small formation right here. If we break down below that, bring some pressure in. And likewise, if we broke below there decently and back up through it decently, that would be a good long opportunity. And if we came back up and tick out some of these other lines up above, that would also be bullish. Mm-hmm. And do you want to look at the Bitcoin?
Yes, sir. We have a lot of controversy with that, Mike. Some people think it's a fad passing fad. Some people think it's worse than a Ponzi scheme. And there are people that think it's the coming thing. I could look at it either way, I guess, because I just look at the charts. The only thing that I can say, I take 30 seconds here, but when the Chicago Mercantile Exchange 3 years ago started to bring it out and made it as a product that people could hedge against, those folks over at the CME are not stupid people, and they got some really smart people. And I don't think that they would have put something out that possibly could be a scam if it didn't have some economic value or something. That's my 2 cents worth. Forget what I said. Tell us what you're thinking, Mike. That's what you get the big money for. So please tell us what we're looking at.
Well, regardless of what people's philosophy is on the Bitcoin or not, what this is an analyzation of the Bitcoin futures. And the Bitcoin futures is a regulated market on the CME, backed by the CME and then the government ultimately. So this is a fairly liquid, stable market, more stable than the coins would be themselves, in my opinion. So this is a regulated market. This is a different ball of wax than just saying you're buying some new token out there and hoping that things will work out.
Yeah.
So that being said, macro, we've been bearish in the Bitcoin, obviously, for quite a while, from up near these highs, actually. The rollover on 11/10/21 put this in a bearish trend. I said the sell-off should exceed 13,000 a coin from the 69,355 level, and we've seen 54,430 of that. There's other bearish formations in here that one could read about, but another significant one was trade below 34,830 put this below a significant bearish formation that projected this downward 13,000 minimum, 35,000 plus maximum, which if we saw the maximum would actually make that negative a coin. I'm not saying we're going to see that, but we did see 19,905 of that so far. All of these bearish formations are on hold. And then more recently, we have been bullish from the lows, from multiple different formations down here. And then those have just been put on hold because we failed below a formation, pulled back to it up here, and then we fell back below another formation here today, pulled back up to it, rolled over. That projects this downward 1,500 a coin. If we get back above that, that'll warrant, if we break back above this decently, that'll warrant of short covering for probably 1,500 a coin. And then if we take out this upper formation, that'll also project this higher as well. I would also just note that we left a medium-term bearish reversal above yesterday, which also warns of pressure. And this would have to take out 23,340 decently on the upside in order to negate that. Just zooming out a little bit, though, we really aren't in any semblance of a bear trend anymore. We've taken out any kind of lines that you could say, hey, this is still trending lower. I think that this is probably building some kind of base here, which is good news for people that are holding the coin. Coming back up through these key areas was important. And we're coming up here. I mean, we may roll over here. We'll see if this rolls over and consolidates for a bit and then takes out these areas. And if you take out 25,270 to 25,350, that would be an important milestone in taking out a significant resistance up there. And likewise, if we took out 32,455 to 32,855, that would also be bullish. Also, I just wanted to mention, too, if you go to the website, we are going to have auto trading programs available soon with spreads and also fully black boxed auto trading systems on LOD program, letter of direction program.
Yeah, could you tell the folks how that auto trading thing works? Because, that's a relatively new thing that's been going on just a few years, but some people don't know exactly how it works. How does a person have an auto trading account set up?
Well, you could set one up with BTR futures. You could set up an account there, and then whatever we trade or give direction to trade, they will trade in your account for a fee per lot per month going forward. And so it's really like they're a managed future account on their side. And some of the systems will be fully automated with human oversight, and other ones will be manually traded, but mimicked trades on that side. So it would be a way to.
That's through Bill Orlowski there at BTR, right?
Yes, sir.
Yeah, he's a real pro. He's been around for a long time and certainly deserves his reputation. That's for sure. Please continue, Mike. Sorry, go ahead.
Yeah, Bill's real solid. He's really been a good friend and a great asset in working with me. So an LOD program would be a way of diversifying your portfolio. It would be like an additional revenue stream to the revenue streams you already have with your trading. And, with the more uncorrelated revenue streams you have, helps your aggregate performance. Mm-hmm. What I mean by aggregate performance means that if you have positive equity curves in uncorrelated markets or uncorrelated systems and you trade those together, they sum, but your drawdowns usually get mitigated because the more of them that you trade, the lesser the likelihood is that you're going to have drawdowns at the same time. One might be up while the other one's drawing down, so it mitigates them. Where that is particularly powerful is in helping you compound your size. And compounding your size is probably more important to your long-term equity income than almost anything else. And understanding how to do that correctly is a function, or one piece of that has to do with the cumulative max drawdowns in your systems as a cumulative aggregate. So,
Mike, can you stay with us for one last segment? Because I have two other questions coming in from some of the folks here in the den, and we'll answer those questions when we get back from our break, okay?
Yep.
Okay, we'll be right back, folks, with Mike Moore of Moore Analytics.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, we're back, folks, speaking with Mike Moore of Moore Analytics. We have two questions, Mike. One is, how long have you been in the business?
30 years. Ever since I got out of college.
Wow, that's pretty good.
I started on the floor of the New York production.
That's good when you start young. Second question is, do you ever give lectures or training sessions on some of the stuff that you do?
Not really, unless it's to my clients. You know, sometimes I'll do a Zoom session with my clients, but
okay,
I probably should at some point. I'm always too busy.
Yeah. Well,
anybody have any suggestions?
Well, if we ever have one, I'm going to certainly include you because I think you got some really great charts, and I like the technical aspects of what you're looking at. And because you specialize in the oil business, which is one of the this is a great segment to trade, folks. Crude oil and heating oil and gasoline. Well, no, I don't trade gasoline so much, but heating oil and crude oil are really, really terrific. The one information that you've given me in the past 3 times that we've given us is the fact that how heating oil actually leads the market higher, and I've been watching it, and even intraday. People must know this because, my goodness, it just actually moves in that direction for sure. It's really quite spectacular, actually.
Thank you. Yeah, I wanted to show you something real quick. This is an example.
We got 1 minute, so fire away.
This is an example of the spreads that we'll probably be trading in this letter of direction program, but the spreads in the markets move really hard. These are some examples of some downside calls and then another upside call here. When you're trading a spread, you're short 1 month and long another month. So there's already an inherent hedge in there, but you're making a difference between them. Did you have one more question before I go? I think you had another question.
No, that was it. That was the last question. Yeah, go ahead. Listen, here, what we've got to do here, we've got to leave here, but we're going to have you on. I'll set it up after we're done here, Mike. We'll have you on in a couple of weeks, but thanks for joining us again, my friend. Mike Moore of More Analytics, folks.
Thank you, sir. I appreciate it.
See you tomorrow, and Jeff Hughes, Alpha Insights, will be our guest.